Good morning, everybody, and happy Monday. We're just about ready to start, so thank you all for being here. Thank you all for being here. Yep, perfect. You guys hear me okay? Just quickly checking. All right, perfect. All right, good morning, everybody. Happy Monday. Serge Berger here from thesteadytrader.com. It's May 12th, Monday, and this is our morning call, so thanks for being here. We're going to go through the top three things on my notepad. What we do here in our morning call is we spend about the next 10 to 15 minutes going through the top three things on our notepad. Now, if you're here for the first time, welcome. It's great to have you here. We do this morning call Monday through Thursdays at 9 o'clock Eastern time, 9 o'clock New York time. And if you guys have any questions, of course, along the way, please let us know. We are here to help. That's the whole point of what we're doing here, is making sure that everyone, gets a lot of value out of this. If you haven't done so yet, please make sure you do subscribe to our channel. It allows us to be able to continue to do this morning call. It is completely free of charge, and it also allows you to be updated in real time when we go live with analysis. Also, please make sure you give us a thumbs up like. Let's get started. All right. Top three things on the radar today. We have to quickly talk about the news over the weekend, which, of course, is what's gapping equity markets higher. Then I want to continue looking at gold and update there. Then there's actually some moves taking place in the uranium markets, URA. We'll look at a specific stock there as well. This was some late news on Friday that I think a lot of people didn't catch, or maybe didn't make the headlines as much. So let's get started. Okay. So first of all, what took place over the weekend? Well, if you are in our Buzz and Banter, in our members area, you saw what I posted early this morning, and essentially what I said is that, it's not like there's no tariffs. It's just what markets are doing. They're reacting very sharply to the prospects of much lower tariffs than there were before. We're looking at 30% taxes for 90 days on Chinese goods. And 10% on U.S. goods from the China side. So again, it's not like the tariffs are zero. It's not like all that is gone. It's a 90-day hold, and that leaves room for negotiation. But of course, the markets are going to take this very positively. So let's start off with the one thing that I think everyone probably wants to hear, and that is where are we in the S&P 500? So if you've been here for the past couple of weeks, or past 2.5 weeks now, I think it's been, we've talked about this area of resistance. We call it the stuck buyers, what did we call it? I can't remember what the name was. The term is we used up there in this area here. So what you're looking at here is the S&P 500 futures. Why the futures? Well, because the cash market isn't open. The cash market opens in about 25 minutes or thereabouts. So you've got a lot of buyers that bought the S&P right after the election, and those people are now just getting back to essentially break even, or maybe just a very small loss. Which is fantastic, right? Because a lot of those people were down as much as 20% in their S&P purchases, and now of course they're back. So I would expect that they're trapped buyers. Yes, exactly. Trapped buyers is the word we use. Thank you. And so there's a lot of people that are now up there that are breathing a sigh of relief, and I would argue are going to be better sellers. Now, the bigger picture thing that I think we need to just make sure we don't lose sight of right now is the fact that these tariffs are actually providing a lot of opportunities for markets outside the US, right? So what we continue to see, and this is now literally 13 months and going, and we've been saying this for 12 months now, actually, I can no more than 12 months, is that there is a lot of large institutional investors. A lot of them are foreign pension funds, insurance companies, endowment funds, whatever you have, that kind of thing. I mean, endowment funds more of a U.S. thing, but that, stuff like that. And then U.S. ones as well that are basically looking to diversify across the globe. And all they're doing, and I need to make sure I'm clear on this. We're not saying sell all our S&P stocks. That's not the point. The point is when these guys come in and they start selling down, meaning rebalancing their huge portfolios, they're gonna sell more U.S. stocks. In fact, they're probably gonna sell treasuries. And so we would imagine that right around these levels here, and all we're doing is we're getting back to the very upper end of that range. If you guys were here for the past, again, 2.5 weeks, you heard us talk about this range in the SPY. We talked about that range being, somewhere around, the lows, of course, of April to around, 570, 580. So, add a zero to that for S&P 500 levels, and you get to roughly around where we are right now. Now, again, it's not going to be an exact science. Certainly, we could shoot up a bit higher here still, but all we've done is go back to the upper end of that range. So, we're staying consistent here with our analysis. Is that with these trap buyers up here, we do think are going to be potentially net sellers. So that's kind of where we are. There's honestly not a whole lot more to say for stocks here. I will just quickly want to bring up a few charts that I know everyone is watching. One of them being Tesla. If you look at Tesla, for example, it is this morning. It's going to open up around 323. Call that 325 in terms of levels, and the 100 period moving average for Tesla is actually a level that's been holding pretty well for that stock. So the stock is essentially this morning looking to open more or less right around here at the very, very upper end of that range. So we've broken out of this range. Now we're reaching the next level of resistance. So if you've been here for the past couple of weeks, you heard us talk about this range here, being somewhere, obviously the lows of April to roughly about, 290, 295. We broke above that on Friday. And now this morning we're gapping up into that 323, 324, 325 area. There's a few points left there still, but that gets us right to this simple line of resistance, including the 100 period moving average, which is the blue line for that stock. So that's what we're watching there. And again, a lot of stocks are basically at the same level. So I think it's really difficult to kind of say a whole lot more here right now for equities, other than A, again, I think we have trap buyers up there, and B, that we're at the very, very, very upper end of that range. And at this point, you need basically good economic data to get us to fresh all-time highs. So my base case is we remain in a trading range, and that there are going to be expensive lessons learned here for people who now look at their IRAs and say, oh, everything's good, nothing to do. I can't give advice here, obviously, but over at Blue Marlin Advisors, our investment advisory firm, I'm having daily conversations with people, making sure that we are now going to be better sellers of particularly of S&P 500 centric stocks. So educational here only, but just so you guys know what we're kind of doing on the actual investment advisory side as an FYI, again, educational only here. So that's what's going on there. At the same time, of course, as we have equities rally, what we have this morning as well is a really good size rally in the dollar index. And the dollar index, as far as I'm concerned, certainly it can bounce a bit more, but I think it's getting to a point already where it might find resistance. And the big question I have at this point, and I don't have an answer to, unfortunately, is whether this big dollar rally this morning is A, sustainable, and B, if it is, if it could possibly see equities get overbought, go down while the dollar remains bid. I just don't know. I don't have an answer to it, but we're watching it very closely, because the other thing about this, and this gets us into the other thing I want to talk about here, is gold, right? So if you look at gold, and I'll bring up the spot price of gold, as you guys know, and for those of you guys that follow us with the Vertical X Pro indicator, which I want to quickly share with you. I do want to talk about Bitcoin as well, so stay tuned on that. Let me quickly bring up the Vertical X Pro. Where are we? Here. Get rid of this. Here. All right. So for those of you guys that have been with us here for the past few weeks, you know that we've had an extreme overbought reading in gold, or the GLD ETF, which is this blue down arrow, and from that point on, gold is now back to being down about 6%. That's, again, part of that is a function of the dollar rally. So again, the other question I have too is, like, do we need the dollar to go up in order for gold to go down? So again, if you look at gold right now, this is now the current price. Yeah, I think there is, a level of support here around 3,200. I remain overhedged my gold, in case for those people that like to know. I think the 3,200 level on spot gold is an interesting level to watch, because I think if we break that, we probably could get back down to 3,000. So but again, the question is do we need to see the dollar to continue to rally, which it is this morning, in order for gold to sell off? I just don't know. I have more questions than answers on that. I'm just being fully transparent. Hopefully you guys can appreciate that, as opposed to trying to make up stories like most people on TV. So those are questions, right? Not that I'm asking myself here publicly, but I would venture to say that there's going to be more sellers in gold still, almost regardless of what the dollar does. That will be my thinking here, as we see some reallocation and people taking some profits on gold. It could be fund flow related and sort of more technical in nature or structural, as opposed to people actually giving up on the gold trade. I don't think that gold trade is over, but again, we do think I remain overhedged, meaning I've been long gold since mid 2023. Personally, it's just my book. And I'm overhedged now since we got that overbought rating in gold in April, and I think that I don't think we're done yet with that move. So that's that. The other thing is silver. I just want to quickly point out that silver continues to act, relatively well. This is the price of silver. What's interesting is that if you look at silver this morning, silver is actually only down 22 basis points. This is the ETF. It doesn't yet take into account the actual move. I think it's XAG, isn't it? Let me quickly bring up XAG so you can see the spot price here. So this is the spot price. So this is the actual live chart of silver. And, if you compare that to gold, you can see gold down 2.6%, silver up. So, I've had now for a few weeks this view that we could see that relationship, that gold to silver ratio get exhausted. I think it is, where we could see a bid in silver prices and the price of gold coming down. It looks really very much like that we're going in that. So I remain long silver. I'm long gold, but again, I'm overhedged, so I'm actually net short gold right now. That's kind of where I'm at on that. I find that, and then also on the equity side, net short equities, which is not fun this morning, but luckily we're net short gold, so that's helping stem the torture a little bit here this morning. In terms of yields, I continue to get the question, what about bond yields? I have, again, this morning, probably more questions than answers. But I would imagine that if we see some economic deterioration, that ultimately this chart that I continue to point out in yields is that we are going to start to see 2-year bond yields ultimately break below 3.5%. Clearly, that's not the case today, but that kind of speaks for being long, the 2-year note, that's kind of where we are in that. Two more things. One of them is going to be a couple of individual stocks, and then the price of uranium. So what we had, there was a news flash on Friday, late Friday. This is the URA ETF. I closed the day on Friday up about 2%, not quite. Again, coming into sort of a level of price memory. We'll see if it matters. You know, this is a volatile puppy, but it is interesting to be watching this, because the news headline on Friday essentially was that the U.S. administration was essentially thinking of an executive order for more a quicker production of not production, building of like nuclear power plants and that kind of stuff. So that was positive for things like uranium. Should be positive for something like CCJ, Cameco Corp, which on Friday closed up 3%. Same chart. This trades just like URA, the ETF. But you know, Cameco Corp, just to give you a little bit of perspective on this, if you look at some of the performance metrics on a stock like this, and then I want to quickly talk about international equities as well. But I'm going to quickly show you this here. So you look at something like CCJ, Cameco Corp, which for the year to date is actually still, it's now back down. It was up nicely, but it's holding up really well. You know, all things considered, all around all the news that we had around tariffs and things like that. So that's something I definitely want to watch very closely. And then last but not least, again, just keep in mind that the global markets, global equities are still dramatically outperforming U.S. equities. And that's, again, what I mentioned before. You know, you look at the DAX, which is making fresh all-time highs this morning. Chinese equities are holding up very well. You look at a single-name stock like Alibaba, which is going to be up at the open this morning. Obviously, most things are up sharply this morning, but Alibaba this morning looks to be opening up about 6% higher. So like a lot of high-octane stocks. But again, just, you know, that outperformance in international markets continues this morning. It's not like the S&P all of a sudden is taking over. It's not. And again, I think the fund flows is going to be remaining with us. You know, these large institutions, you have to think about that. They don't make decisions based on a 1 or 2 day move. Like, they have quarterly, maybe semi-annual meetings, and to take down their U.S. equity exposure. And again, it's a rebalancing act, not a being short equities. U.S. equities, that's not at all the talk. So they're going to continue to sell into any rallies, even if we have big rallies like right now, where in my view, arguably we're overshooting. They're going to be net sellers into that as opposed to net buyers. So that's kind of what we're thinking. Okay. That, and then last point, yeah, it's just other equities. You look at something like Argentina, ARGT is the ETF for, so that just speaks to international markets. Obviously, this is not exciting as you guys buying YOLO calls on 0DT calls on Tesla and all that kind of stuff, but it might not decapitate you, whereas Tesla could. So just kind of keep that in mind. So yeah, that's kind of where we are this morning. It's going to be probably an exciting week to see how things hold up. Any questions, as always, please let us know. Tom is asking short gold, long silver spread. Well, I just told you, like I'm net short gold, and I say net short because I have a long-term core allocation to gold. I've had it since mid-2023. I'm not selling any of that, but I'm over-hedged. So I'm short gold futures against that as a hedge. That's just me. And I'm long silver, outright long silver. That's what I'm doing here right now. So that's it, folks. I'll see you guys over in Trade Ops in about 10 minutes. I'm sure there's some stuff to do here today once we see the market settle in you know, the first 60, 120 minutes or so. And also we'll see you guys back here tomorrow morning. Thanks for being here, and